Hello, and welcome to a very special episode of the Volt, a BitGo podcast from BTC Vegas. I'm Zain, Bedi, and I help lead fintech partnerships here at BitGo. And I'm joined by my guest, Sisun Lee, head of crypto at Aven. Welcome.
Yeah, good to be here.
Yeah, absolutely, man. It's great to have you. Sisun, you have before we started this podcast and started recording, we were chatting a little bit about your background, and you have across multiple different geographies and industries, right? Built very successful companies, worked as a PM at Facebook, Uber, Tesla, helping them build out, pretty incredible products as well. How do you think this diversity of different experiences across the globe has really shaped and formed your global view on Bitcoin and where it fits within the financial system? I know we started off with a tough one.
Yeah, I mean, it was not planned.
Yeah.
It's just looking back, I was fortunate enough to do a lot of interesting and diverse backgrounds and companies. Obviously comes with the trade-offs. A lot of it was sort of learning, figuring out, kind of having this generalist roles. But a lot of it has...
Yeah, because I can imagine, right? You've seen consumer goods, you've seen crypto infrastructure, and then now it's like, all right, how does all of this kind of come together and cumulatively, ultimately, like, what is that outcome and what does that product look like? And it seems like you are pretty keen that Bitcoin as a financial instrument, as collateral, is going to be there. I'm just curious on kind of how all of that fits together.
Yeah, so, I mean, funny enough, back in 2014 when I graduated and went to, in Facebook, folks were actually already talking about Bitcoin. Many of them have actually now become leading industry experts. I wish I listened to them when they told me to buy Bitcoin.
Yeah,
at the time, it was one of those, I heard about it, people were around me. Obviously back in the Bay Area, there was a Bitcoin white paper. I've kind of dismissed it, but I would say everyone around me in the Bay Area were sort of very formative in helping me get exposed. But it was actually more from a philosophical and technology lens. And then interestingly enough, because with my career, as I actually then moved to Asia, I was exposed to this huge retail rush. And it was also a very different perspective on how people perceive Bitcoin and crypto.
Absolutely.
Right? In the Bay Area, it was very sort of early days, very technical. We're kind of thinking about, well, what is money and sort of how do you sort of redesign it from first principles. And then a couple of years later, not because I was interested in crypto, but because my life took me to Korea and different parts of Southeast Asia. And their sort of lens and needs of crypto, especially with remittance and payments, the demand were so strong, but very different than the Bay. And so I was always exposed to it. I got really into crypto because the second company that I started was actually in the Web3 space where we were building embedded wallets. And a lot of that was because I was trying to get into crypto and understand it. And things were very abstract. I couldn't quite understand. And so just generally trying to get into the infrastructure space and making things much easier for consumers to adopt was sort of my natural way into this world. And since then, I've always been excited. And I had an opportunity to join Aven last year to lead crypto. And so here I am.
Oh, that's brilliant, man. And I think that leads me very well to my next question here, which is why Aven and why now, right? Like you just said, really diverse experiences. You were out in Southeast Asia. So yeah, what's the impetus now?
Yeah, so funny enough, the CEO of Aven, Sadi, was actually my first manager.
No way.
Of my first company that I joined, Facebook. This is 11 years ago. But we've always kept in touch.
Yeah.
And so he started the company a couple years ago. And so I always kept in touch. And it actually didn't start out as like a crypto or Bitcoin-backed company. The mission was much more broad. It was delivering the lowest cost and the most transparent form of capital. And the company really focused on reducing the transaction cost by automating everything, all the underwriting, to the point that their first hero product, which is a credit card backed by HELOC, could be done very quickly online so that you can reduce the rates for consumers, so that you don't have to go to the bank, and all of the appraisal that comes with title insurance could all be automated online. And what was interesting is that even that product itself was very foundational in lowering the rates for consumers and doing it in a way that was a couple of seconds versus a couple of months. He agreed. I initially thought this was about home equity, but he wanted to get into sort of the next phase of the company, new assets. And Bitcoin, I think, is one of the, if not the greatest assets of our lifetime. And the fact that we're not doing something similar, not just Aven, but industry-wide, which is providing the best liquid and lending options, seemed like an opportunity that somebody had to do. And at Aven, we wanted to do it next. And so I was very excited to join.
Absolutely, man. It's a brilliant company. You guys are on the forefront of a lot of the things that are going on across digital assets. And if I'm being honest, people call and often say, we want to make Bitcoin productive. It's not necessarily just making it productive. It's a little bit further than that. It's how do we actually make it so people can use it in their everyday life? And then one step even further, how can we then help democratize access to financial products that people would have never had? The availability or the access to touch some of these products. So do you think that part of the driving force for you is that democratization, or is it really just, okay, this is more efficient, it's better? Kind of where do you think you land on those two?
Yeah, I mean, I think some of the best companies are sort of built with the notion of you're kind of taking things that elites or a very exclusive community have access to, and then using technology to make it highly accessible.
Love it.
And when I was at Uber, I felt it firsthand, which was it is effectively a private driver at the palm of your hand for everybody for the fraction of cost. And at Aven, the idea was really, if you really look at the super wealthy, they tend to borrow against their appreciating assets so that they can take advantage of both liquidity as well as the fact that their assets are very valuable and they want to hold on to it. Doing that at scale has been very costly because most people don't tend to have like very, very highly valuable couple millions of assets.
Yeah.
Which means the transaction cost that goes into appraising it, the math just doesn't sort of work out. But if you can really reduce it to zero, all of a sudden, any asset of any value, you should be able to borrow against it. And that idea was very appealing.
Yeah.
Yeah.
Absolutely, man. Not being pigeonholed into one medium to also interact with some of these products as much as today it is for people who are not in that top 1%. I'm sure long term, you probably do think in a long enough time horizon that the 1% will also be borrowing and lending, in this same financial ecosystem that you guys are currently building. Or how do you think that plays out?
Yeah, I mean, I think as long as we reduce the transaction cost to zero, it'll be applicable to everybody. I think it'll be most applicable to sort of everyday consumers first. But to your point, I don't see why not to sort of even the 1%. Bitcoin is interesting because we actually think it's quite widespread already. There's something around 50 million Americans that own Bitcoin.
Yeah.
But this was a long time coming for us. Yeah.
I hear you, man. And it's funny because I feel like everybody I talk to, especially now with AI tools like Claude, et cetera, they're always talking in weeks and not months or years. So I feel like that time horizon has really shrunk
it's
in
very
terms
exciting.
of development. And are you seeing that firsthand as well at Aven? The mix and the use of AI and crypto with like some sort of commerce aspect to it as well. Are you guys seeing that firsthand?
Yeah, absolutely. I mean, in order to fulfill our goal, we have to use AI. Our use of AI is probably more inward focused versus like consumer facing. It's more of all of the traditional OpEx that go into operating a lending business or banking. We're obviously trying to leverage AI to make it efficient.
Yeah.
And so it's really just building a lot of these tools that meet our workflows. There's a lot of companies that are providing sort of these type of services with AI. The challenge with us is that we're in such a regulated field that the precision really has to be 100%. And sort of we take this stance of, we do have to take, obviously a lot of these models that exist, but sort of training it and building it to meet our internal workflows.
Yeah, that makes perfect sense, man. You can't unleash it. I was just talking with another gentleman yesterday. He's got it essentially firewalled on his own AWS instance. So in that way, if anything does go wrong, right, it's at least not going across like the entire company's stack.
Totally.
Yeah.
Yeah, we think of sort of health and wealth as two sort of primary values where you can't make a mistake, right? Healthcare and like people's money and wealth.
I think that's really well put. Those are the two areas where there is zero wiggle room for mistakes. One thing in concept I feel like I've been hearing you talk a lot about recently is machine banking.
Yep.
And you kind of just described what it is, which essentially is an AI native banking company and firm. Can you talk to me a little bit more on like where do you see that going and how that may come to a head against some of these larger financial institutions who have been around for a while but are also playing around with it, right? Boni has announced some different operational stuff where they've essentially been able to operate, multiple different clearing aspects with just an AI agent team and then one manager. So I'm just kind of curious, how do you see that competition playing out?
Yeah. I mean, our entire company started from that simple question, which is, what if a bank were run by machines?
Yeah.
And I think the question is like, why? Why does this matter? I mean, the obvious reason is, for example, because our hero product is, credit card backed by home equity. We started with it because credit cards were invented in 1950, and average American has still continued to pay well over 20% APR. Yeah. And so when you kind of look at all of these, historical graph of innovation, we live in a world where intelligence and automation is accelerating. There's no reason why finance, especially when you reference sort of like interest rate on a credit card, should remain still. And when you dig into it, it's because the costs that go into running sort of that machinery is getting bloated. Right? We kind of think of the cost of capital as three primary variables. There is what we consider internally, at least from a lender's perspective, a risk-free rate, which is from our perspective, it is a federal rate.
Okay, right? So it is still the Fed funds rate.
Yeah, it is sort of like, that's the the rate that kind of morphed the industry. And then there's the sort of the risk of the capital itself, which is a lot of lenders like ourselves would sort of have different underwriting to make sure that sort of the delinquency and how we underwrite consumers are highly protected so that the cost of capital can be reduced. And then the third variable is the transaction cost. We take a pretty strong stance that it is the transaction cost that by far is the largest sort of form of margin that gets added back to consumers. And so our goal is to just really compress it, really inch by inch, but I think over time compounded makes a huge difference.
Yeah.
And from that lens, there's no other way but to leverage AI and make things as efficient as possible.
Yeah, absolutely, man. You touched on a bunch of interesting points there, and one thing I'm quite keen to understand further is right now today, you guys have recently launched. I know we've talked about the HELOC product,
Yep.
The Visa credit card as well, correct? Yep. Can you talk to me a little bit more about what you guys are doing there and how you're off? Let's say somebody wants to go grab one. How could they go sign up for one today?
Yeah, I mean, everything is online, and underwriting and your ability to get the funds is within a couple of minutes.
Yeah.
That's the whole sort of value proposition at the cheapest rate. And so we provide sort of actually a guarantee. If you actually come to us and we've given you a rate that is higher than the rate that you've gotten from the sort of over the last couple of weeks, we'll beat it, or we actually just give you money because we're that has to be our mission, and so we have to sort of put money where our mouth is worth.
You guys do a price match guarantee on
effectively
rates. That's brilliant, dude.
And yeah, this product, and we've only been around for a little bit over 3 years.
Okay.
We launched the world's first credit card backed by home equity at the end of 2021, but really we started getting going in 2022. And what was really interesting is that we actually made the biggest interest rate drop in credit card history because of this. Because we've effectively, what we've done is there's two forms of lending for consumers roughly. There's unsecured and there's secure, and they both have sort of extreme pros and cons. Unsecured is very expensive, as we talked about since 1950s. The average interest rate hasn't really gone down, but it is extremely convenient and fast. You could just click a button and get a credit card tomorrow. The unsecured lending, on the other hand, is much lower cost for you because you are now collateralizing. The risk from the bank's perspective have gone down dramatically. But the time and the hurdle it takes is actually quite extensive. And so our stance is that is an engineering problem. If we can build it in a way where all of these appraisal and processes can be done very quickly online, there's actually no reason why anybody would ever get an unsecured loan. In fact, we think no one should get an unsecured loan.
So you see a world where people use credit lines, not just the 1%, because that is how it works today, but then consumers, retail also is using credit lines, and then personal loans, unsecured loans completely go away.
Yeah, we think everyone, perhaps not everybody, but there's all these assets that people own. It's just tapping credit against it is very difficult because that process is extremely opaque and one-off.
Yeah,
and so the more we can make that transparent and the more we can automate it, the more people can take advantage of it.
Yeah, in today's world, bulk majority of the transaction costs, yes, ACH is relatively cheap. Wire transfers, $10, $15, just depending on whatever bank you're using. But the real cost, it sounds like, is the fact that there are multiple humans in the loop at almost every step while you're going through this process.
That's right. And from a business perspective, as a bank, when you incur all this cost, you're going to have to then offset it by charging the consumers higher amount.
Absolutely.
Yeah.
Yeah, because ultimately they are running a business.
They're running a business,
Yeah,
yeah.
so they've got to make money.
And us too. And so, we kind of take a very simple proposition, which is if we can help consumers worldwide shave of, let's say, 100 bips, and we take sort of 10 bips as an interest, and sort of the net margin has gone by 90%, 90 bips, we think that's a fair trade for the world and for us. Now, obviously, it's not that simple, but that's generally how we think about it. So we make more money, the more we save consumers money.
Ultimately, like you said, we're running a business, you're running a business, so are the traditional banks. But it does sound like there's quite a bit of a philosophical edge to at least what you guys are building. How much does that drive you personally and, the mission that you guys have?
It's really interesting because before I joined Aven, I actually took out a Bitcoin loan myself.
Okay.
There was an opportunity where it was an investment, and at the time I didn't really have like liquid laying around, so I had to liquidate, but I didn't want to liquidate my Bitcoin.
Yeah.
And there was an option to do borrowing terms, and I took it, and I'm glad I did it. It was a lot better than not taking it, but I remember that the terms itself were not very good as what I would have expected.
Yeah.
Especially now, obviously, I'm biased. I think everybody here generally biased in a sense that we're early believers of Bitcoin.
Yes.
But even then, I thought it was way miscalculated. And so that desire to, knowing that at the same time, when you get a mortgage or home equity, there's these like 10, 20, 30-year plans with all this flexibility. I just felt like that's a pretty large arbitrage and something that we had to do. And so from a personal side, maybe not necessarily philosophically, but at least like there was like a very clear anecdote for me of there's a big opportunity here that we need to just solve for. Yeah. Was one, and it would be pretty shameful if people had to like liquidate their Bitcoin to meet these needs, because as much as you believe in the long-term value of the asset, life hits you pretty fast. Sometimes you need capital, and so that was always like myself, like when I faced it, even though the terms itself weren't great. And so that was always there. And I think philosophically, it's really not like I've started my career with this goal of reducing the cost of capital for everyone. Yeah. But I think it is one where I always come back to sort of every business in the world at the end of the day is either a direct shot or a bank shot of helping people's wealth or health. It just kind of comes down to that at the core of humanity. Yeah. And because what we're doing is directly sort of attacking one of them, like our goal is to help you get wealthy. And there's many ways to do it. One way could be helping you make more money. Now we take a stance of the other side, which is help you, pay less. But it's at least something that's very easy that I could sort of align myself to. Like I know that if we do this, this will be good for the world.
Honestly, it translates very well, right? It's not abstract. It's not complicated in the sense of if I'm a consumer and I want to take advantage of this and I want to sign up for your card, it's going to mirror pretty similarly what it would be like to go sign up for a credit card today with Amex or whoever else.
Yeah, totally. And I also enjoy that we're actually selling a fairly fungible product, which is to say that ultimately we're selling dollars. And so there's a lot of reasons why people would choose one bank or one lender or another. Yeah. But this is my personal belief, is that if you're, let's say, borrowing money, the most important thing is, can I get it for the lowest rate? And so I've also kind of saw this as, this is an engineering problem. Like we have to build trust, we have to build go-to-market, and there's obviously everything that comes with building the business. But fundamentally, this was like a math problem. And if we could change the math and radically reduce it, the benefit were very clear. It wasn't like, and I came from like a consumer product background where a lot of people perceived the value differently and it was really fun. Yeah. But this one was like a very direct shot of, this is a very hard thing, but if we execute it and really compress the margins and the industry followed, this should be a very good thing for consumers.
Brother, that's been your whole career, hasn't it? Taking on like really challenging problems and trying to figure out how you can bring structure to this incredibly unstructured environment. Is that something that you still find like personally drives you as well?
Yeah, so before Aven, I was actually thinking about starting a new company. I think if you're from Silicon Valley, that's sort of like almost people kind of take that as for granted, like that's what you should do.
Yeah.
And I was thinking about that for a while too. It's like, hey, what should I work on? But I was very glad that I got to meet the team, because one of the things that I at least convinced myself with working with the team was that it doesn't have to be my own company. Like if the mission is very large and there's a very clear path in which I can make a lot of impact, it seemed very exciting. And so far, I'm having a great time.
You're maximizing for impact and maximizing for outcome and not necessarily trying to do anything for a title or whatever it may be. And that makes perfect sense, man. It's probably why you have been so successful over your career across so many different companies. You mentioned something really interesting. And I think, obviously, here at BitGo, we're an OCC, federally regulated bank. Compliance,
Yep.
Just had a meeting with compliance this morning, is always top of mind. Always, as you said, principle number one, first principle. From my understanding, compliance is also, for you, always top of mind. Doing
Sure.
things within a box in the right way. Sometimes we push the edges, as we should. It's part of the reason why we're in crypto. How have you guys kind of built from those compliant first principles to give your users, your customers, solace and peace of mind that their assets are safe?
I mean, not by design, but based on the history of the company, we actually started from one of the most regulated industries in the world, which is mortgage. And when we put home equity into credit card, now it's sort of a double whammy compliance of you're dealing with mortgage, plus you're dealing with credit card. And so we almost had no choice but to make sure that we became very, very good at compliance, and that became almost like our moat, even before we considered and thought about Bitcoin. So that's one. So that was always within our lens, and I'll give you, examples of how to translate into the actual product. But it's also the reason why, for example, we were fortunate enough to partner with you guys at BitGo. Like these are things where it's not this thinking of, oh, how do we compress cost and try to do things ourselves or cut corners. This is everything, right? Custody is the product.
Yeah.
And so we had to go with the most highly sort of valued, respected, and sort of company that had the most history. So that's like obviously what we had to do. And in terms of how it translates to, for example, our product, we looked at a lot of existing loans. And we're actually, quite frankly, quite shocked that many of them advertise things like no credit pull, no credit check, those type of things. Because technically, as a margin loan, from a pure banker's perspective, as long as you over collateralize, technically the bank shouldn't lose money because this is highly liquid.
Yeah.
But that's actually looking at risk from a banker's perspective, not from the consumer's safety perspective. And so we actually, for example, kind of go out of our way to add more friction to our origination, even though we love reducing friction and making it automated, because we take a position of, yes, that's true. If you over collateralize a highly liquid asset like Bitcoin, there should be zero loss for us. But the goal isn't to wipe you out. Like we're not doing this so that we say, hey, there's a single metric of will we lose money, yes or no, good to go. It's more of, should you actually take this loan? And should we have the responsibility for check for basic things? So we look for basic things like your ability to pay, basic FICO, or you're delinquent over the last couple of months. And so these are trade-offs that we have to do, which is we want to make things as deterministic as possible and give all of the freedom to consumers to choose. But we also have a lot of data that we've learned to know that we may say, actually, I don't think you should have $100,000 or $1 million worth of line. Yeah. The max that we can give you based on this and your ability to pay might be $50K. Now, those are things that we're going to have to learn because this is a new industry, new asset, and new type of people. But our goal is maximizing growth while making sure that you don't get wiped out, because that's not the goal.
Yeah, absolutely. You want them to stay whole and continue to use you guys and work with you, right? Compliance as a moat seems to be almost the tagline then for what you guys are building. Something that has traditionally been incredibly complicated, arduous, and difficult. And you're just saying, hey, look, we've got the tooling. Why don't we bring it in here so then that way we can actually offer not just a better experience, but actually better terms for those end users. The crypto infrastructure, you guys obviously looked at a lot of different players. Qualified custody is ultimately the underpinning of a lot of the stuff that you guys are doing. How do you think about safety? How do you think about those rails that you ultimately use? Are you looking for speed? Are you looking, just if you don't mind talking a little bit about that, that'd be great. Yeah,
so when it comes to collateral management for this particular product, which is our Bitcoin back line.
Yes.
The most important thing for us is, well, two axes of risk. One is the collateral management itself. of course.
Makes sense. Yep.
And then the second is the sort of the execution risk. And we wanted to work with a company that was world expert in both. In terms of liquidity, liquidation, sort of execution risk, it was more of making sure that all of these liquidity providers out there, whether it's OTCs or exchanges, we needed to make sure that there's a route to work with all of them. And so through BitGo, we work with all of the biggest sort of the exchanges and OTCs out there, because our goal is, hey, look, if Bitcoin price drops and you're getting close to this maximum LTV, that there is enough liquidity where all of these mechanisms will work. And then obviously on the custody side, it was more of making sure that, well, who's the most battle tested? Were there any issues? And who's the most transparent? So we really I prefer that you guys are actually public, right? This is like, hey, this is great.
Absolutely.
And our CTO has known, I think it's one of the founders, I forget, Chief Revenue Officer. And
Chen.
Chen,
Nice.
So we went very deep, right? Like really understanding sort of their history, the infrastructure. We met in person, went through everything. I mean, we asked a lot of just silly questions, right? But just we really wanted to understand it. We felt very comfortable that, hey, this is the right thing to do.
That's brilliant, man. How do they know each other? I'm just curious.
I think they met in Microsoft a long time ago.
Okay, that Microsoft connection is strong.
Great,
The diaspora of the Microsoft employees.
That's right. Yeah, honestly, we signed it, and then also I think the price was very reasonable. So like, oh, that's fantastic. But I remember because that wasn't like the main component.
Yeah, you guys, again, going back to what we discussed at the beginning, you guys were actually focused on what you were building and not just the commercial terms, on trying to get it as low as possible, because you knew if I build this the right way and I have the right partners, then the commercial aspect of it will make a lot of sense and things will kind of fall into place.
Yeah, the other thing is because Bitcoin is still, relatively new from like capital markets perspective.
Yeah.
And from like people's...
It's really just this year, right?
That's
that it's being used in any sort of real
100%,
financialization.
100%. And they're in people's willingness to like borrow against it as an instrument. The downside risk is quite high, right? This isn't one of those things where even if, let's say, for example, the loss was very minimal and we took care of the customer, having their Bitcoin, for example, or any kind of presumption that something went wrong with their Bitcoin or we sold it or they got taxed, no matter what the remediation is and no matter how small that amount is, would kill our business. Right?
Absolutely.
This is one of those, as an industry, we have to do things extremely the right way. Otherwise, there should be too much skepticism.
Yeah.
So, those all tied into who we wanted to work with.
Yeah, that's brilliant. We're so happy to partner with you, and
likewise.
Excited to be a part of this exciting journey. You discussed a couple of different ways that you guys are mitigating that downside risk, including having origination fee, checking some deep, let's just call it like high level FICO type of scores and stuff like of that nature. What other things are you guys doing to protect the ultimate book of business that you're loaning against?
The credit box is one. We actually don't have origination fee. So we don't use like fee as a way to, sort of like divert people's...
Apologies, yeah.
It's all good, yeah.
Yeah.
But there's for example, one of the big thing is we actually ask for your income and we verify your stated reserve depending on the size of the loan. And so with Bitcoin loans, because it can get quite high, as it gets sizable, we just want to, our goal isn't for us to decide whether you get access to or not, because that would actually disrupt our goal of building the most transparent access to capital.
Yeah.
Everything should be deterministic in a way that if you wanted, you could get it. However, if we think that it's riskier, we want to make sure that it's verified versus taking the stance of purely maximal growth.
Yeah.
Right. And it's purely bad for our business, I would say, because in a margin call business, even if you're risky, if you gave us enough Bitcoin, we're pretty sure that we're not going to lose money because we have your Bitcoin, we can sell it. But that's a pretty dangerous stance in our opinion, because like you should not be doing this. Yeah. So if you say, so the way we do our ability to, what we call is like your ability to pay, is a calculation that we do based on, for example, like your debt to income. And as it goes sort of sizable, we want to make sure we can verify some of your income, especially if you say, hey, my income is based on like, I have a liquid net wealth of 100 million or 10 million. We don't need to check it all, but based on how much you're looking for, we might say, hey, can you like help us prove that you have access to these amount? And we made it all automated, so it's very easy for you to do. For example, you can choose to over collateralize and then actually take out the access, but just to show that you have proof of it, you can give us your bank statements. You can do things manually if you like. You can, we have API integrations with like exchanges so that if you're actually sending from, let's say, your Coinbase or whatnot, you can just instantly show us. And so those are things that I think, at least from the start, it adds more friction, but I think it is actually the right thing to do. And the entire traditional finance outside of Bitcoin has evolved in certain ways with regulations to protect consumers. There's a reason why, for example, when you borrow against like home equity or whatnot, there's certain LTV of the home value you can borrow against. There's a certain debt to income that you shouldn't cross. And this is because when time comes to shove where this person is in a very distressful situation, the goal should be that we should reasonably believe that you have the ability to pay this off without having to liquidate it.
Yeah.
Yeah. Because your ability to liquidate is actually not your protection. It's actually a bank's protection, but that person does not want to get liquidated.
No, ultimately it becomes almost a distressed individual, and that's not the position that's beneficial for yourself, for any of the creditors or anybody else that's out there.
Yeah. And it's gonna come with trade-offs, but I think in the long term, we believe that our community will actually choose us over others because of this, because we don't want to go out and actually tell you that there's zero FICO checks and zero FICO pulls. We don't actually think that's the right thing to do.
Makes sense. And we talked earlier, compliance as a moat. This is just yet another example where instead of relying on like a third party to do some of those checks and give like a thumbs up, thumbs down, or some sort of risk rating, you guys have decided to take that in-house and build it.
And we'll tell you exactly what it is, what the rules are. Here's what to do. There isn't sort of like hiding of very ambiguous, oh, you don't get money. It's like brilliant. It's exactly what it is. This is our rules. This is how we operate. This is why. You may disagree, and I'm sure over time, like we'll learn.
Yeah.
But generally, that's how we do the business.
Yeah. I mean, you guys are providing transparency to a space that lived in a black box for however many years and for quite a long time. It's brilliant, man. It's brilliant to see. So we've talked about how you guys have built a moat around compliance, the transparency aspect to it. Can we dive in a little bit more into like the actual details? Like, honestly, I'm a bit interested myself, so I would love to, sign up. But what do the terms look like? What does the process look like? We touched on a little bit, but would love to hear a little bit more around there.
Yeah, so when we started, we were actually quite surprised by the options in the market. And we thought there were sort of two extremes. One is probably less so for Bitcoin, but more broadly in crypto, is that you can borrow on DeFi directly. And the really awesome upside of that is like it's super fast, super transparent, and it's like an open term length. You can borrow for as long as you want. The challenge though is that it's a variable rate because there's actually no middle lender that's sort of controlling the risk. And in a way, it's awesome at times. Like I think right now, if I wanted to borrow against ETH on Aave, and please don't quote me because I haven't looked at it last time. But like I'm a big believer of DeFi.
Yeah.
And I think both
the rates are incredibly competitive. Yeah.
But if you actually go back to like historical rates, 2-3 years ago it was like 20%. And so it is very extremely volatile. And so you have to control that yourself and know what's happening, right? Because this is all based on code, and one day it could wipe you out. But if you know exactly what you're doing, it's a fantastic instrument. On the other hand, on traditional sort of CeFi, if you want to borrow against Bitcoin, the upside is that they are going to offer you a fixed rate.
Yeah.
And so you can have that assurance. However, the fixed rate wasn't very compelling in our mind. It was still priced fairly high, but more importantly is that it's a 1-year term. And I think the length really matters when you consider why somebody might want to borrow money. And so we wanted to kind of take the best of both worlds. And so the primary sort of, in my mind, and there's a lot of features we can get into, offer is that we've provided the lowest fixed rate, but also at 10 years. And so the industry norm is 1 year. And so our ability to do 10 years, I think, is going to unlock a lot of use cases that was not previously feasible. Like when I needed the money to invest in something, while I had it allow me to do so, I now had 12 months to figure out how to pay it back.
Yeah.
That's a very different game than now if I say, I don't know what the volatility of Bitcoin is going to be in the next months, or maybe even the next 2 years, but I believe that in 10 years it's going to be quite high. it actually allows me to draw it and use it for really interesting reasons that I probably wouldn't have done otherwise. And I think 10 years is just the start. There's a lot of work we had to do in the capital markets to enable it,
Yeah.
but we're going to go to 15, 20, 30. And so that's always the plan. It's just we wanted to make sure when we launch that it was at least a decade long, which is 10 times more than the industry rate. And if you compare our rates with everybody, with the fact that we don't have origination fee, not only are we the lowest rate, it's the lowest rate at 10 years versus other rates at 1 year. And so hopefully I think that's going to make a big difference for consumers. Yeah.
100%, man. I mean, having a 12-month ticking clock as soon as you take out that loan to then repay it, most of these investments that, and I'm sure the one that you made as well, that time horizon's probably 7+ years, right?
Yeah.
That you were looking to.
100%.
Yeah. So it's giving people that flexibility to.
Yeah. And you can actually stretch it to 15 years. And so, what we actually provide is an open line.
Okay.
And so it is not a fixed loan, which means once you originate, you don't actually start, there's no payment that you incur because you haven't drawn anything. And you have up to 5 years of sort of activation period to decide, hey, I want to draw money. And so what you can do is you can actually take out a 5-year, the same fixed low rate, but do it as a 5-year interest-only plan. And at the end of a 5-year, you can refinance it into our regular 10-year amortized plan, which means you've actually now stretched it to 15 years. And so we really care about just stretching it to as long as possible because we think that's when things start to get really interesting for consumers in terms of how to leverage this for their financial upside.
Absolutely.
Yeah.
Makes a lot of sense. And we probably should have mentioned this earlier. Congratulations on your most recent raise.
Oh, thank you.
Yeah. 110 million Series E.
Yeah, Series E, yeah.
At 2.2 billion valuation.
Yeah.
It's not too bad, my man.
Thank you.
Absolutely. And I know part of that announcement is you guys also got, I believe, a $3 billion credit line that you're looking to now deploy, to some of these end users.
No, I think that $3 billion you're referring to, we've originated.
Okay, you guys have already originated $3 billion.
But actually, as of a couple of days ago, we've originated over $4 billion. Yeah.
What rate are you guys growing at then?
We're growing very fast. Yeah, we're growing very fast. I actually joke around and say we're probably the least known unicorn in the Bay.
Yeah.
Although Vinod tries to do his best because every interview he goes in, he drops Aven as the next Stripe, but we have to tell him bigger than Stripe. Yeah.
I like that. Yeah. 3 billion. Okay. 4 billion as of this month.
Yeah, as of this year.
Okay.
We're growing very rapidly.
And what do you think you're on term or on track for the rest of 2026?
It'll be hard to say, but hopefully a lot higher exponential growth because this is a year where we're actually expanding our products.
Yeah.
So previously it was purely HELOC, and now we have Bitcoin, and there's going to be many more products that I can't announce yet, but that we're going to be doing, and hopefully combined, we're going to start to really form shape.
And no worries if you don't want to, but are there any hints you can drop on where you think the product suite is going to continue to develop? It doesn't have to even be Aven specific, right? Just where you kind of see some of these instruments going.
Yeah, I mean, personally, I sort of see this as a sequence to the end game of we want to manage all of your ingress and egress of your personal finance.
Yeah.
So that any type of capital, if we can provide at the lowest, you should kind of work with us. But the next sequence thing is we took automation and applied to highly opaque industry of secure lending.
Yeah. And
so we will, really double down in this space. Home was one. Now it's going to be Bitcoin. And, while we haven't really, this isn't our initial focus, what I'm really excited is once we prove this in Bitcoin, you now have same sort of similar rails for any kind of digital assets to be enabled. And if you think a little bit further of every asset becoming digitized, then what we've built on V1 for Bitcoin should be applicable for all digital assets. And so that's very exciting for us to eventually get to. Yeah.
So you see a world possibly, again, time horizon to be dependent, but do you see a world where let's say you have OpenAI, private securities, as a former employee, and do you see a world where people can even borrow land against that? That's going to be tokenized.
Yeah, 100%. I mean, I think you should be able to appraise anything of any value.
Wow.
Yeah.
That would be brilliant.
Yeah, we hope we get there. I hope that's the end game.
Yeah. You probably see that a lot in the Bay Area, though. founders who are paper rich,
Mhm.
but don't necessarily have access to some of these kind of
Totally.
credit lines.
Yeah. I mean, I'm not sure which bank does it, but at least back in my days, Silicon Valley Bank did a lot of this, right, with the founders. But that's actually a perfect example of, I mean, the founders themselves are probably not 1% in terms of like their liquid wealth,
Yeah.
but that's a very special community that's taking advantage of a very interesting instrument. And there's no reason why, as long as all the transaction costs go towards zero, why you couldn't do that for everyone for every assets.
Mm-hmm.
Yeah.
The intersection of AI, crypto, commerce, I think is happening at a pace that none of us would have even ever thought was going to happen.
Mm-hmm.
We've had Uber, DoorDash, your former employer, Uber,
Mm-hmm.
DoorDash announced that drivers can now get paid
Mm-hmm.
using stablecoins.
Yep.
Brilliant, really welcomed announcement from them. Visa, I believe it was Visa yesterday or the day before,
Mm-hmm.
announced in their earnings that, hey, look, 99% of our growth over the next 10 years is going to come directly from agentic commerce.
Yep.
So how do you kind of see all of this coming together?
Oh, we're very excited. I mean, I think even just, let's start with the obvious one of stablecoin.
Yeah.
This is very fundamental because if you actually think about a margin lending like ours, the risk is actually more on fraud. And so, for example, if there is a threshold at which once your LTV crosses and you get liquidated, but you got liquidated because part of that balance triggered a threshold, but that balance was fraudulent, or let's say that balance was actually paid off on ACI, but with ACI, the settlement is not instant.
Yeah.
It's actually one of those things where many weeks later you can refute it. And so because the way these rails work is that you actually have multiple ledgers trying to reconcile, right?
Yeah.
And that's actually why a lot of these costs get added, because it's the last mile problem of like fine tuning, making sure it's fixed, and you have to do like operations and fraud and make sure that these things are in general sort of kept into the correct ledger over time. But it's like there's like time delays. But if you have like instant settlement layer like USDC or any type, I mean, it could be really any digital asset, but let's start with sort of like stable coins, then actually all of these problems that existed kind of goes away.
Yeah.
And because you're using these existing crypto rails and blockchains, you also don't have to rely on third parties. And so the fact that actually Visa Network is starting to adopt USDC is fantastic. And we're very excited because once you do that, whether you prefer it or not, it's just like a matter of time. And so anything that's just more efficient will over time take over.
Yeah.
And so I think digital assets on digital rails are just more efficient than traditional assets and traditional rails. And so it will just get there. Now the question is when. I don't know. Like when I started my first crypto company, I thought it was going to come a lot faster.
Yeah.
Right. And some of the things came a lot faster than I thought, and some of the things came slower than I thought. But generally, that's just the end game that I assume we'll all go to.
Thank you very much for joining us. That was an absolute pleasure.
Awesome. Thanks for having me.
Absolutely, brother.